Welcome to the latest Motley Fool scoreboard. I'm on in Chocolate Balloon. We've got longtime fools Jason Hall and Matt Frankel giving a 1 to 10 rating to Millennial and Gen Z insurer LMND, ticker symbol LMND. Let's get to it. Matt, how do you rate the strength of LMND's business, including factors like industry and competition? 1 to 10. 10 is invincible. 1 is hopeless.
I say a 7. There's really no denying that the product is resonating with consumers. The claims processes got great reviews, and in-force premium has nearly doubled over the past 2 years alone. But you have to have underwriting down to be a good insurance company, and they really don't yet. They had a 79% loss ratio. That's before business expenses in the second quarter, which is a seasonally strong one for insurers. So I'd say a 7.
Yeah, I go 6.5. Directionally, Matt and I are much aligned, and I'm not going to repeat a lot of what he said. I'll just add a couple things. They've really figured out how to use AI on the front end with customers and internally, and I think those things strengthen the business. But my concern with the underwriting improvements, the entire industry we've seen the trend with underwriting get stronger, and I'm not convinced how much of what they've done is things that they've done or just the trends within the industry. So I may be discounting it too much, but I think they do need to earn a little bit higher score here, and seeing those trends with underwriting improvements continue before I'm ready to give them a higher score.
Yeah, we know insurance is a cyclical industry, just like banking, and we want to see full cycles before making too much of a judgment. Matt, let's rate LMND's management. 10 is Warren Buffett, 1 is Homer Simpson.
I said an 8. I really like this team, and if you had asked me like 2 years ago, I probably would have said like a 5. Yeah. But they've really done a great job of pivoting from a growth at all costs model when money was free to a focus on profitability. One of their co-CEOs was also the founder of Fiverr, which is a really successful business. You have a former tech executive as the other one. Really impressive team, and I think they're doing everything right in what was a difficult pivot environment.
Yeah, I think it's right. It's easy to look at the stock price, and obviously you have to consider that with how you think about the CEOs. But really, the things that they've done, I think are smart. And I don't think we should underappreciate like the shift in capital markets. You talked about interest rate, that free money environment. They shifted based on that, while also still focusing on growth, which is important. Definitely their focus on operations and on getting underwriting right. I think this is a good leadership team. So 7.5.
We should point out they're co-founders. They used to be co-CEOs. I think
that's right. They're not
the
anymore.
CEO.
One's the CEO and one's the president.
But,
right.
But they're in the mix.
Oh, yeah. My guess is that their actual responsibilities hasn't changed. It's just more alignment for how it looks to us.
Yeah. Call a rose by whatever name you want. Let's talk financials. Matt, 10 is Fortress, 1 is Yikes.
I say a 6, so this is where my ratings start to get a little bit lower. LMND does have tons of cash. They have $931 million on its balance sheet. Only about $200 million of that is the required insurance reserves it has to have. The company achieved positive net cash flow in the most recent quarter. It's still losing money, even on an adjusted basis when it comes to the bottom line. But they do expect to mainly be cash flow positive from here on out, except for the fourth quarter, which is the seasonally weak one. But that high loss ratio in underwriting, it does scare me. Until they establish a track record of better underwriting, they're at a 6 with me.
Yeah, I agree, and also gave it a 6 in this category as well. I know I'm beating the same drum over and over again. The customer-facing tech, the way they use AI there, the way they talk about using AI for operations and some other things internally really works well, and they say it's a competitive advantage. I believe it. But that strong balance sheet, it's not going to remain a strength if we see significant catastrophic losses in excess of their reinsurance, and if they don't continue that steady trend of writing more profitable policies. Now, interest rates are also good helping right now because of that cash they have on the balance sheet, and that's a part of the insurance model where your balance sheet can generate cash from interest and investments. So that can become even more valuable as a cash generator. So they have to protect that.
Right. Valuation, Jason. How well will LMND stock do over the next 5 years, and how safe is it? Keeping in mind that 10 is a sure thing, 1 is a lottery ticket.
I'm going to say binary outcome just because I want to steal it from Matt. He put it on the outline first, but I'm going to say it first. I think, again, I believe that beyond the industry underwriting trends, LMND's probably fixed what was a broken model. And I think they will continue to improve it. But if I'm wrong, this will not be a big winner. Investors will almost certainly lose to the market and probably lose money too. So while I think this is a 15+% kind of stock and business, the safety score is only a 4 because they still have things to fix and continue to improve.
Yeah, I said the same 15% plus if they can achieve their profitability targets, which is a big if.
Yeah.
So I also gave it a 4 for safety. I agree with the binary outcome thing. As Jason said, I wrote it first today. But their massive cash balance, I think, does kind of prevent it from, it kind of caps its downside momentum, if you will. And that's why I didn't rate it lower than a 4 for safety.
Right. In the interest of time, we're going to skip Armchair CEO and go right to everyone's favorite topic. Jason, is there a company in Lemonade space that you like better?
Yeah, in insurance now they do different kinds of insurance than Lemonade, but Kinsale Capital gets my pick here. This is a popular Fool premium stock. Probably going to book some pretty big losses this quarter from the hurricanes in the Southeast. Sent the stock down some already in anticipation, but this is an exceptionally strong insurer. It's taking share in a niche segment of P&C where nobody really dominates. Stock now is below 30 times earnings. I think that puts it in a good valuation for such a strong growth business to really do well going forward.
Yeah, I do own Kinsale also as my kind of growthy insurance play. I also, MetLife is my biggest insurance stock, and that's really more of a value investment. They trade at a much lower price to earnings, and it's just a very solid P&C insurance business.
Thanks to both Jason and to Matt. They've given Lemonade an overall score of 6.9 out of 10. That's up. We did it a long time ago, and it got a 5.9, so it's moving up in the world. I know Matt was saying, and Jason, that the management has gotten more proven and more impressive. It's a home run swing with a high chance of striking out. Look out for a new scoreboard every market day at 7 p.m. Eastern. Next up is Pinterest. Till then, Fool on.